Hello traders, how are you? Vladimir here from Home Trader Club, and in this video I want to share with you the best strategies to use in 2024, part 1. Before we start seeing examples, I want to say big thanks to 8K Broker for supporting me, my community and this channel. To enjoy all the very special offers we have with 8K Broker, including the access to Home Trader Club up to 1 year, including private mentoring sessions, access to the trading systems, live trading rooms, project, and everything we have online, please refer to the links below this video in the description. So in this video I will present 3 trades that we took this year in 2024 in Home Trader Club. These videos were published in real time to all of Home Trader Club members, and what you will see now is this very video as it was published. Okay, I will input this video now as a piece, and after the video I will explain everything in detail, what you saw and the strategy behind it. Okay, we will see 3 such trades, I believe, not in explaining blank trades, blank charts, or empty pages with drawings, lines and everything. I believe in talking with real examples as they were spotted, as they were treated. This is the best way to explain, and this is the best way to learn. At least that's how I see the things. So the first trade that I will be talking about would be the Aussie CAD sell. Couple of things though before I actually explain the Aussie CAD. First of all, big thanks for your time watching this video, and I hope you find value in watching it and you appreciate these videos. If you do, please hit this like button. If you are new to our community, our channel, please consider to subscribe with the subscribe button below this video. Feel free to share this video with anyone who you believe can actually benefit watching it and learn something new. And the second thing is, I want to remind you, we uploaded a series of new ebooks, and there will be more coming soon. To download our ebooks, all you have to do is to go to the blog VladimirRibakov.com, or you can find this link below this video in the description, of course. Then you navigate to Forex education and then free ebooks. And in this page you would be able to find the ebooks. Again, there will be more coming very soon, so enjoy and have a good reading. So the first pair, or the first trade with the example and the strategy, Aussie CAD sell. Watch the video, I'll see you right after that. Hey guys, how are you? Bearish idea on the Aussie CAD. So let's take a look what do we have here and how do we want to work with that. So on a daily chart, at the end of these 3 waves, basically what we got is the beautiful bounce of the supply area, a beautiful hold of 0.90 around psychological level, and from there I was personally waiting to see what the market does in terms of the waves here, and if the lower time frame gives the sign that it's ready for the correction. So going down to the 4-hour chart, you can also see it on the 1 hour, but you can see it clearly on the 4 hour. This is the last day leg, completing 3 waves and making a false breakout, fake high, and bearish divergence. After that, the market breaks the low and making the structure of 3 lower highs, lower lows. And here I was waiting to see what is coming next. So what did come next is this range scenario with the breakout of its leg, the downside. And that's where I basically like it. It holds the, again, below 0.90, it holds the volume profile zone, and it holds the ranging conditions. So for me, any pullback here is great sign for continuation. According to the daily cycle, we should expect to see the price going down to 50% Fibonacci. Okay, top. Now, if we plot Fibonacci expansion on these two developing waves, you can see that the 50 fits exactly on the Fibonacci extension of 100. So this would be our classical target zone. However, I don't know to predict that, but we might see the price having troubles around the 38.2 as it also holds the 61.8 Fibonacci expansion. And there is a potential of a divergence here. Again, I don't know to predict if there will be or not. Nobody does. But this is definitely a potential level to pay attention to. So our target zone is here, but we will need to pay attention to if and when the market will build up like a bullish divergence against us around the zone. The invalidation zone, or in that case protection, is the previous high. As long as it holds below this area, any pullback here is a good sign for further continuation. That's pretty much it. Straightforward, not much else to say. For any questions, as always, I'm there for you in our Telegram group. Good trading. So, for me, the first element in trading is always analysis. There are three elements in trading: analysis, which is the preparation for a trade, then trade, which is execution of a strategy, and the third one, management. Manage your trade according to the management rules. So you saw the analysis behind it. That's I don't want to waste your time and repeat it over again. The starting point is always multi-timeframe. What happened was there, we spotted the daily supply zone. We figured out a bearish divergence. We were waiting for the price to flip the structure. So from making higher highs, this is the structure, we flip and we start to make lower highs. After that, sell the rallies here becomes the plan. So this is the leg I will want to explain now, because this is where the strategy comes in. Okay, so for that I will go to blank screen, draw the lines, and then we will see again how it was implemented in the OZCAD. Okay, so this was the first leg from the daily chart. First leg from the daily chart should be waves on the 4-hour chart. As money flow that happens to be on the daily chart will have few waves of money flow on the lower time frame. So on the 4-hour chart we should have 3 waves down, which create 3 lower highs, lower lows. Okay, and a correction. Correction could be either A, B, C, D, or a range, which means no sequence of higher highs, higher lows, contradicting the previous trend. Or in rare cases, we would have one straight rally, which will bounce off one of the previous highs. Okay? After that, at that point, we will start looking for ourselves. Usually, the breakout point, let me just go, I'll do it, oops. I'll do it with different color here. Usually, with the breakout point, we receive the entry. Okay? Of course, if you miss that a little bit, then pullbacks and you are good to go. So now let's take a look on the OZCAD. Okay, we got, this was the daily screen, the daily leg, sorry. And on the 4-hour chart, we formed here 3 lower highs, lower lows. Of course, in rare cases, it could be 2 lower highs, lower lows versus same 2 waves to the opposite direction. But in that case, we did have classical 3 lower highs, lower lows, while the daily low is broken. Okay, pretty straightforward. After that, remember, we could have either A, B, C, D with a breakout, or some sort of range and breakout. If it is a range, you will want to see at least 5 spots inside, when the fifth is typically the breakout. It could be more than 5, not less. Okay, and in that case, I determined the Fibonacci extension levels here together with the daily Fibonacci, which is the 50% and 100% Fibonacci extension on the levels. This is our target zone. So any pullback here would give us a green light to go, and we will get here a very good risk reward. Okay, so this is the strategy, the way I love to call that: 3 waves plus 2 waves, or 3 waves plus range and breakout. And it's not random 3 waves, it is multi-timeframe synchronized waves, okay, which in that case happen to bounce off a daily supply zone. So the analysis is the most important for the preparation. You analyze the levels, you make sure it's respected, indicators, divergences, price action, anything you work with. I work with supply, demand, cycles, divergences, and then you verify the price structure. Then strategy. For me, the entry here is 3 waves plus range in that case and breakout. This is my trigger. And as you can see, Aussie CAD makes a quick pullback, improves the risk reward for the trade, and makes a pretty straight run all the way to the target zone. Risk reward is classical, positive, in our favor. Setup is fully synchronized between the time frames, which means we have higher probability to get a win. Do we have a guarantee that it will win a trade for us? No. No strategy can guarantee a win. Okay, I hope you don't have this illusion. But increased probability, yes. How much increased? Usually in between the 60 to 70%, depends on the risk reward. Of course, smaller risk reward tend to deliver even more percent, like 80%. But the bigger risk reward, 60 to 70%. And how it's important and why it's important, because this is how you make the numbers work for you. Okay, I want quickly to explain this part in this structure. So let's say average risk reward ratio, you go with 1 to 2, initial one. Okay, which means that if you are right, you can cash out 2. You know what, let's make it even less, 1.5. And when you lose 1. You lose 1 again, you profit 1.5. As you can see, this is 50% success rate, and you are already plus 1% in total. So with 60-70% accuracy, your numbers would be significantly bigger. Okay? And if you keep this average risk reward positive, and the way to do that is multi-timeframe synchronization. Why? Because multi-timeframe synchronization means different flow of money from different time frame, showing the same direction, pointing the same control, buyers or sellers. Okay, so this is the importance of analysis, of the implementation of the entry rules, strategy, and then the exit rules, the management. What do you think about the Aussie CAD, about this trade? If you have any questions, don't hesitate to ask in the comment section below this video. The next trade would be the CAD franc buy. So the same thing like we did with the Aussie CAD. Now I will show the video, the original video as it was published in Home Trader Club, and after that I'll come back and follow up for the explanation. Hey guys, bullish idea on CAD franc is discussed also in our weekly session. On Monday we have a bullish divergence at the end of this cycle and our anticipation to see corrective leg. On the daily chart we failed yet to break this key high. It is still very important sign for longer run. to validate the break, and then we can anticipate a longer bullish run. That's why this setup is more aggressive, which means smaller risk if you are involved. In terms of waves on the 4-hour chart that validate the opportunity for me, we have here the 3 waves up or a zigzag and a range that so far forms these waves here sorry. Right now it managed to break, and very interesting thing is it holds above the volume profile here, which is very important sign. So any pullback here should be the sign for continuation. The instant potential target is the daily swing high, this one, which yet to be broken. And if it will be broken, then there is no limit for us here on the daily chart. Then we are heading towards the target zone here of the supply area, first of all, which also fits the, if we plot the Fibonacci, it will fit the 38.2 Fibonacci next to the 38.2, as you can see. And final target could be 50% of the weekly cycle for the long run. Again, this is a more aggressive one, as we do not yet have the completed reversal. Pay attention to. So again, the range breakout, we want a pullback and continuation as long as this low is holding, and slightly below that, actually below the volume profile, this is where the invalidation is, just in the case if the market will decide to try something like that before with a bullish divergence. In rare cases, such price moves could happen. Again, it's very rare, but could happen. And the way that the market was moving this week, and with all the news and the aggressive zigzag back and forth, this is a probability and possibility to remember. Okay, so again, pullbacks and continuation. This is the instant interest zone we have here, potential target zone. But if it manages to break there, then the next target or the ideal target for us, of course, is the daily swing highs and the 38.2 level from the Fibonacci of the weekly cycle. That's where we'll be, that is the target we will be aiming to. That's it for now. For any questions, I'm there for you in our Telegram group. Good trading. So as you saw on the analysis video, I hope you didn't skip this part, but watch it if you did, because it's important to understand the analysis. It's again multi-timeframe synchronization. Weekly bullish divergence, daily bullish divergence, 4-hour chart, making the structure of higher highs, higher lows. We can break it down to 2 waves up or 3 waves up. Okay, doesn't matter in that case. Why? Because this is the first wave after the weekly bullish divergence. And after that, we received a range. You saw the explanation on the OZ CAD, right? I was explaining on the sell direction. Let's go to blank screen. And I want to explain it again. Okay, just the opposite direction. After 3 waves, we either get A, B, C, D, which means 2 lower highs, lower lows, and a breakout. Or, in that case, a range and breakout. If it is a range, we need at least 5 spots, while the fifth to be the breakout. Okay, so the cut franc managed to make the breakout for us, any pullback, and we are bullish, expecting further bullish continuation up, with this as a short-term target and the final one with the weekly levels. Risk reward in our favor, multi-timeframe synchronization in our favor. Strategy as clean as it can get, 3 waves up followed by the range and a breakout. Straightforward. It cannot get cleaner than that. Can that guarantee that you will get a profit? No, there is no guarantee in trading. But it will increase your odds, increase your probabilities. How much? As I explained before, 60 to 70% accuracy with a positive risk reward, and that's exactly what will boost your performance for the long run. So this was the trigger. Let's take a look how it played out. The final part, as always, is management. So after the first target was hit here, as remember, just quick reminder, right? Pullback and buys. The risk reward is in our favor. This is our risk. The reward, as you can see, much bigger here. So we were riding with the final part all the way until the price actually flipped the direction. Remember what I explained before at the beginning of this video? 3 higher highs, higher lows at least, and then we flip to make lower lows. It's time to get out. And after this massive rally, we finally got where this sequence, as you can see, right, from the higher highs, higher lows, breaks down. It's an amazing place to cash out a trade, okay, and that's what I call management. Okay, so once again, can that guarantee a profit? Nothing can guarantee a profit, but if you work with as clean as it can get setups in a multi-timeframe synchronized situations, your odds would be around 60 to 70%. With smaller targets, it would be even 80%. For the long run, you do not need anything more than that. Remember that. Majority of traders, especially the beginners, they believe in some holy grail. They believe in some never lose strategy or some everyday money strategy. You are smart enough to understand if it would be that simple, there would be no market. Okay? Remember, the market is a jungle where everyone wants the same thing like you, to put their hands on someone else's money. If you want to do it successfully, you have to do it better than others. And better starts with this very little different decisions. What do you think about this CAD franc and about this strategy? If you have any questions, as I said before, don't hesitate to ask in the comment section below this video. The final trade for this video would be the DAX buy. And before that, I want to invite you to Home Trader Club. If you want to dig deeper in the trading techniques of mine, what I'm using. As you know, I'm an internationally certified financial technician. If you don't know, now you know. So I know a thing or two. Or in my past, I was a nostro trader. So I traded for companies with their money until I made enough to allow myself to be the retail trader I am over a decade now. So if you want to learn more of all that, you are very welcome to join our family with the link below this video in the description, or to enjoy the 8K broker offers as long as they are here. Also, you can find all the information with the link below this video. So now, as we did in the past examples, I will input the original trade as it was published in Home Trader Club. Watch the video, watch the analysis, understand why did they choose buy direction, and then we will go back to the strategy and the management. Hey guys, how are you? Bullish idea on DAX as we discussed on our live session on Monday. The expectation here, basically from all the indices, DAX included, is to complete the ongoing cycles until the market will then create the divergences and a major turnaround. However, that's something that is yet missing. At the moment, the way it is forming, there is no coming divergence here as we don't have a peak, valid peak. So technically speaking, the bullish momentum is still here, is still on, and the ongoing big momentum and big cycle is still happening. With that in mind, dropping down to the daily chart, trying to find the developing level. So currently, very possibly to assume the market will try to reach the 61.8 expansion, maybe even beyond that. We will, of course, need to follow up for this divergence around the area once and were completed. I said once and were completed because, again, even though it is developing here, it doesn't have any verification for that yet from the higher time frame. Therefore, technically, the momentum is on. The sequence of higher highs, higher lows still remains in play. And on the lower time frame, on the 4-hour chart, we got the first rally. Then we got the corrective movement down in ABCD. Of course, it also could be broken down slightly different in this variation of 3 waves, and then a little range here with the attempt to break it upside. So this line is breaking. This important demand area is holding, and as long as it is holding, the bullish view remains valid and on. And on the 1-hour chart, for those of you who want to get into the shorter term cycles, no problem. If you don't want to get involved with the 4-hour, then look for the 1-hour to go and complete this divergence, then pullbacks on the 1-hour, and then the continuation with the higher time frame. So for me, as per the technical view, the ABCD breakout is the trigger. Any pullback towards the retest zone or beyond is the buy signal. This is the invalidation area. As long as it holds, I am bullish. And the target at the moment is the 61 expansion of the daily double cycle, the one I showed you. That's around the 17,800. Of course, we will need to pay attention to what happens and how it works out, and if there will be completed divergence here on the daily and the 4-hour chart. But at the moment, there is nothing completed, and that's why the bullish assumption is on. That this would be the target on for me. Potentially even beyond this area, because again, the weekly does not have completed divergence. So theoretically speaking, it can take it more and more until the weekly will also form its completed sign. Okay, so that's pretty much it. It's a longer term level, so it's not a very short term idea. Of course, the market can suddenly make a run, but theoretically speaking, that's not a very short term, as you can see here. And the trigger here, the strategy is the ABCD breakout. Okay, so that's it. For any questions, as always, I'm there for you in our Telegram group. Now, I want to remind here that indices, the risk must be used accordingly, and not everyone can afford trade indices, especially on the higher time frame, where the room of protection is bigger. So do not participate in numbers or trades that are beyond your risk management plan. It's very, very, very important that when you choose to participate in any trade, that you deal with the numbers you can afford. Okay, very important thing to remind ourselves as traders. For any questions, I'm there for you in our Telegram group. Good trading, and bye for now. So, absolutely the same logic, multi-timeframe synchronization, but in that case, we don't go with the wave against or change trend. We are riding all the higher time frames. In that case, it's multi-timeframe trending conditions. Weekly is bullish, maintaining its structure of higher highs, higher lows. Daily is bullish, maintaining its structure of higher highs, higher lows, and none of them completed something that looks like that, where the price flips or any other reversal signs. So what do we do as traders in that case? Join the ongoing trend. And one of the ways, one of the strategies to do so is 3 higher highs, higher lows, followed by A, B, C, D, or a range and breakout. In that case, we got the ABCD. Okay, here we are making the higher highs, higher lows, making the ABCD correction, and making the breakout. No signs against on all the higher time frame. So what we need to decide the final stage is if with the breakout we have good risk reward. Okay, we choose the targets based on the analysis, as I explained on the video, around this Fibonacci expansion level. So if we have a positive risk reward ratio for this trade, that's it, that's what we need. Will that guarantee a profit? Of course not. But we know that our starting point is optimized. So what happened with this case is this strategy that I love to call 3 plus 2. 3 waves in the same direction, 2 waves in contradicting direction, counter direction, and a breakout. As soon as we got that protection below the recent low, target based on the key levels from higher time frame, in that case we don't have supply demand, we have Fibonacci expansion, which I use to determine and find a potential zone where the price could actually push towards. Okay, and these are the rules of this strategy. Let's take a look how it worked out. So this is our DAX delivering, as you can see here, absolutely phenomenal risk reward all the way to the 61.8 Fibonacci expansion, exactly as we wanted. The reason I was carrying all this way is because there were absolutely no signs against. The market was making higher highs, higher lows, and none of the cases, like the cat franc we saw in the example, where it flipped the price. In that case, straight move, sequence of higher highs, higher lows, nothing to worry about, just to enjoy the profits the market is giving in that case. Okay, so the strategy here is 3 waves followed by ABCD, breakout and close is above the trend line is the trigger. Again, multi-time frame synchronized. Remember, analysis first of all, only then the strategy. I don't go 3 plus 2 waves randomly without analyzing the market and higher time frames. I need to know that I am with the flow. Why? To improve my odds. That's all I want as a trader. Higher odds. Okay? Making sure I have positive risk reward ratio as a potential towards the potential target. Once I made sure I do, all the rest is just to wait for the market to do the job, deliver, or providing next opportunity. Okay, so this is the strategy with the entry and the stop loss. And as, in this video we saw a couple of examples for 3 waves plus range breakout with the absolutely same to the upside and to the downside, right? Stop loss, exactly like with the ABCD, same story, stop loss below the recent low of the range, targets according to the analysis we did, or I should say at least 1 to 2 risk reward, try even more, or if in rare cases it doesn't make 1 to 2, then make sure you have at least 1 to 1.5, so you have enough room for management, even if you would need to intervene earlier and cut out a trade. Okay, and this is the strategies that, well, they speak for themselves over a decade, over and over again. Cycles, multi-time frame synchronization, and breakouts. That's what we saw in this video. These are the strategies. Let me know what do you think about it. As always, if you have questions, don't hesitate to reach out and ask. Meanwhile, thanks for watching this video. Feel free to share it with anyone who you believe can actually benefit watching that. And I want once again to invite you to our trading family, the Home Trader Club. Enjoy our trading courses, real-time trading opportunities and real-time trading education, community, way so much more. Join our family with the link below this video in the description. Best to you and yours. I'll see you soon with more. Good trading. Bye for now.